Ever wondered why Apple has over $50 billion just sitting around? Or how Tesla survived its darkest days when it was inches from bankruptcy? It wasn't because of luck. It was because of this: corporate finance. The behind-the-scenes wizardry that decides whether a company lives or dies. Welcome to the secret weapon of every major company you know. The one Apple used to buy back billions in stock. And the one Amazon mastered to expand without ever making a profit for years. Corporate finance isn't budgeting. It's not accounting. It's the high-stakes game of how companies make money, raise money, and spend money. It's the financial chessboard behind every product launch, every billion-dollar acquisition, and every job cut you read about on LinkedIn. And if you understand it, you basically unlock X-ray vision into how the world of business really works. Corporate finance is the art and science of managing a company's money. And that doesn't just mean saving cash. It means deciding where to invest. New factory, new product, buy a competitor, figuring out how to pay for it, borrow, issue stock, use cash, and knowing how much of the profit to reinvest. In short, it's make money, use money, grow more money. Think of a company as a kingdom. The CEO is the king, but the CFO? The CFO is the master of coin. Corporate finance revolves around three big decisions. They're like the holy trinity of boardrooms. 1. Investment decisions. What should we spend money on? Should Netflix produce another 10-part crime docuseries? Should Amazon build new warehouses in India? 2. Financing decisions. How do we get that money? Borrow from banks? Sell shares? Tap into reserves? Every path has a cost. 3. Dividend decisions. We made profits, now what? Keep it and reinvest? Or pay shareholders and risk missing the next big bet? These decisions aren't just spreadsheets, they're strategy, drama, risk. Big bets with real consequences. Let's talk power plays. Apple has billions in cash. Why? To stay untouchable and buy whatever it wants, whenever it wants. Tesla almost ran out of money in 2008. Elon said they were about a month away from bankruptcy. Corporate finance saved them. They raised billions just in time. Meta burned billions on the metaverse. That was a financing decision. And IPOs? That's the moment when companies say, we need more fuel. Let's sell part of the rocket ship to the public. Corporate finance is the reason founders give up control, companies buy others, and why every CEO secretly fears the CFO's spreadsheets. But of course, where there's money, there's also manipulation. Companies can tweak accounting numbers to look more profitable. Some use stock buybacks to artificially inflate share prices. Others bury losses deep in footnotes or spin bad news with a positive headline. Financial engineering isn't illegal, but it sure can be sneaky. Corporate finance isn't always clean. But that's what makes it fascinating. If you want to start a business, invest in stocks, or even just understand why your favorite app suddenly added ads, corporate finance explains it all. It's the invisible hand behind product launches, layoffs, acquisitions, startups going boom or bust. Understanding it is like unlocking God mode in business. You suddenly see how money flows, how decisions are made, and how empires are quietly built or destroyed. So next time you hear a CEO say, "We're doing what's best for shareholders," just know that's corporate finance